Earlier we talked about term life insurance. There's also whole life insurance and universal life insurance. What's the difference?
Universal and whole life insurance are two types of permanent life insurance, which means that it's either projected or guaranteed to last the rest of your life.
Well, why wouldn't everyone get a whole life or universal life policy instead of term life insurance?
Out-of-pocket cost. In permanent life insurance, the insurance company is going to pay your beneficiaries, period. With term life insurance, it runs out, or even if you can renew it, it eventually becomes very expensive or cost prohibitive. You see, term life increases at older ages, and universal or whole life do not.
So on whole life insurance, you pay more initially, but it's permanent, whereas with term, you pay less for a shorter time.
Correct.
So what's with this cash value that's associated with whole life or universal life insurance?
What happens is that since you are paying more than the cost of insurance in the early years, the insurance company sets up a reserve for that policy, and that reserve earns interest. This is how you can have a level premium. To oversimplify, you overpay early to underpay later with whole or universal life.
So what type of life insurance do you recommend?
It depends on circumstances, and each person is different, but the most important thing is to have sufficient insurance, whether you get it through our website at lifeinsure.com or from your neighbor, the insurance agent. It's important to get enough so your loved ones won't suffer financial hardship. That enough, by the way, is more than most people think. Younger people should get up to 15 times their income, and as you get older, maybe 10 times.
Thanks for your help on this subject.